Hi everyone, I hope you've had a wonderful Thanksgiving holiday. So today I wanted to shoot a quick video to let you know about changes that are happening for 2017 tax year, what I think is going to happen with tax reform, and then lastly, some ways that you can lower your taxable income by the end of the year if you're looking for a way to do that. So the changes for 2017 tax year, there's not a whole lot of them. They increased a couple of the items for inflation. The standard deduction is going up about $100. The earned income tax credit's going up as well, a little bit depending on how many kids you have. And then exemptions are staying exactly the same as 2016. There's also a couple of deductions that are going away. The tuition and fees deduction is going away. The mortgage insurance premium deduction is going away. And then most of the residential energy credits are going away as well. So that's pretty much the changes for 2017. For deadlines, though, for 2017, the January 31st, all W-2s and 1099 miscellaneouses should be out by then. So what that means is if that's the only thing you need for your 2017 tax return, you should be able to file your 2017 tax return in the first week of May. Not May, February, first week of February. That way you can get it out of the way and get your refund back pretty quickly. The other big thing for 2017 that has changed is the federal government is requiring all tax filers to have their driver's license number on their federal tax return. So that means when you come in to give me your paperwork for me to do your return, you have to bring your driver's license for you and your spouse. I'll need to get both numbers from both of you. And then for tax reform. So there's been a lot of discussion, all kinds of information and articles out there, and there's nothing really set in stone. But there's a couple of things that I think will probably happen, and both bills, the one in the House and Senate, seem to be pretty much in agreement on them. And that is the standard deduction is going to probably go up to $24,000, and exemptions are probably going to get removed, which is great for people with no kids or a few kids, but with people with a lot of kids, they're not going to see as much of the benefit there. The other thing that's increasing is the child tax credit. That'll probably go up either $1,600 to $2,000. And then, of course, the corporate tax rate is probably going to go down to 20%. And, of course, that corporate 20% tax rate doesn't relate to pass-through entities, which are partnerships or S-corps. So their tax rates, they're talking about adjusting how they get taxed, but they haven't really agreed on anything at all with those. So those are the main things that I think that are definitely going to happen with tax reform. And then lastly, if towards the end of the year, like it is in December, you got some extra money or you want to lower your tax bill, there's two main ways to do that. You can either make some large charitable gifts to nonprofit organizations, and I'll put a couple that I like in the description below, or you can finish off your 401k or IRA contributions, bring it up to the max. And so for nonprofit charitable donations, you have to get all those in if you want to donate by January 31st. And then for contributions, you have up to April 17th to actually contribute to an IRA or 401k for it to affect the 2017 tax year. And as a reminder, your 401k contributions are capped at $18,000, and then IRA contributions are maxed at $5,500. And also a good reminder is that if you have a spouse that does not work, you can set up an IRA for them and contribute to it, so that you, as a working person, can contribute to your 401k the max of $18,000, and then your spouse can contribute the $5,500, and you get both of those as a way to lower your taxable income. So that's pretty much all I have for today. Leave any questions you have for me down in the comments or shoot me an email. And have a wonderful happy holiday season, a Merry Christmas, and a Happy New Year.